Welcome back to Investing with Confidence. As always, I am your host, Joshua David, having a good time with my good friend, my good pal, talking about the stock market, all the different markets, options, futures, Forex, how us as regular or everyday investors can make smarter investing decisions. And learning at Online Trading Academy, the sponsor of Investing with Confidence, local academies right here in Denver, Colorado, and Bloomington, Minnesota. If you did miss tickets to that investing class that we host here locally, you can call 888-682-6466 or just text the word INVEST to the number 484848 for 2 tickets. When you do that, we're going to get you some free stock picks, so don't miss out on those free stock picks. A lot of great opportunities out there right now. Time to get started. And Al, I want to get into a couple different things here. I mentioned I want to talk more about the S&P 500 and oil, but you got a few comments on volatility in the markets. Let me ask you this. With the volatility we're seeing right now in the stock market, I mean, big moves. That's what volatility means, movement and a lot of it. Is the typical Wall Street approach, is that still a strategy that's good for lots of volatility?
You know, it's an approach that's really good for Wall Street, but not so much for their clients.
Okay.
That buy and hold strategy, that's the typical Wall Street go-to strategy, regardless of whether you're looking at generating short-term income or long-term wealth. And basically what it is here, we'll put together a portfolio for you, and then you hold on to it for decades because you're in this for the long run.
Yeah. What are those things that they say? The long haul, the long run.
Yeah.
Don't panic. If you're listening right now, you probably hear those common terms. You're probably reciting them with me.
Yeah.
So they're conditioning people.
Sure. Yeah. And the part of that buy and hold is don't worry about corrections. Don't worry about crashes or bear markets because the market will always come back. And don't worry. We'll be there holding your hand as you go through these periods of time where your portfolios are being decimated.
Wait a minute. Holding our hand. If you're listening right now, have you been getting calls from your broker? Have you been getting calls from your advisor holding your hand in these down markets?
Yeah.
I would say probably not.
Probably not. And if there is a call or if you've called them, the spiel is, well, don't worry about it. This is a short-term thing. The market's going to come back. And it will. It always has. But it may take years for that to happen. And then whenever your portfolio goes down in value, let's say it goes down 50%, it doesn't have to just be back up 50% for you to break even, Josh. It has to be up 100%. So every percent down that the market takes your portfolio requires a higher percent up just to get back to where you were. Why would you want to have your portfolios go through periods of time where you're not getting any productivity from them and, in fact, maybe losing over time periods? And here's one of the things that we have found out over the years, Josh, and that is, and this has been proven over and over again, the public bails almost always at the worst time.
Yep.
And you can't do that with the buy and hold strategy. But when you see your portfolio being wiped away and you can't sleep at night and you have a hard time facing your family because their financial security is at risk, it's hard to hold on. So people bail. Here's a quote from a guy who's part of the Harbor Capital Advisors. Chris Kleik is his name. He was formerly a manager at J.P. Morgan. He said, as human beings, we're terribly wired as investors. We need to create systems to save ourselves from ourselves. You know what he just described? He described our core strategy. That's exactly what it is. It is a strategy that we teach our students that really takes the emotion out of investing and trading, which is what you have to do if you want to do this consistently and successfully. And it's a strategy that you use for any asset that you might be trading. And when we talk about the markets, we're not just talking about the stock market. We're talking about the futures market, the options market, the foreign exchange market, the cryptocurrency market. How about a strategy that makes you follow a certain number of steps, rules-based steps that you use for every asset that you trade, regardless of whether you're looking for short-term income or more for a long-term buildup of your wealth?
Yeah, I'm glad you brought that core strategy up, just based on, we were talking about, we've been talking about this for several weeks now, and if you go back and look at the YouTube, you can kind of see what we're talking about. But the S&P 500 was actually coming into a supply zone where we had identified where potential sellers might be in the market. And the great thing is what you're explaining there is you have low risk, high reward, and then high probability entry points in the markets. And you're not going to be right every time, But if you have all those components, does it matter if you're right every time? It does not. And really coming off that supply zone, we're down. I mean, it dropped, which is what, the strategy says you want it to do. So that's why it's so important, as Al's talking about here, to have a core strategy that Online Trading Academy has to make smarter investing decisions, because you hit the nail on the head. That's how you bring consistency in the market. Because I'm assuming most people, if you're listening to the show right now, you're looking for consistency in the markets, but also longevity. Not just getting in the market for a couple of weeks or a few months at a time and then just quitting. Longevity to have better decisions in your future. And now we have these investing classes local right here in Denver, but also Bloomington, where we talk about how these markets work. We introduce you to our core strategy, which is designed to teach you to make better investing decisions. So I got 20 tickets for callers 1 through 10 to call in right now. When you call in right now, you're going to receive 2 tickets, so you can bring a friend. A lot of people bring their spouse in.
Right.
You're also going to receive a quick start kit, which will help you get started actually right away. And with that, it also includes some free stock picks. So call right now. Call 888-682-6466. That's 888-682-6466. You can also text the word INVEST to the number 484848. We'll get you a call right after that, but there's also a link you'll get right back to actually schedule this class on your own. So we talked about core strategy, how that applies in the markets, and we had a market, especially this last week, that it drove higher and higher and higher. Big moves each day, and a lot of it, you mentioned in the beginning, potentially could be from the Russia-Ukraine issue that's going on, and that's oil. Oil, it actually hit roughly about $116 per barrel. Right. I mean, that's highs from 2017 or something like that. 2011. So we're back at high levels in oil, which we're seeing that at the pumps. I actually paid, $4 a gallon the other day, which, gosh, I tell you what, that's not fun.
No, at some point in time, you may be looking at that as a reasonable price.
Exactly, yeah. But there was opportunities in the oil market. So people are afraid of and worrying about inflation. How do you combat that? How can investors potentially use the markets to hedge from all this inflation and commodity prices and food and everything?
Yeah, well, let me talk about oil for a minute, because when you think about it, oil, it doesn't just impact you when you fill up your gas tank. You heat your homes with oil and gas. Products are made with petroleum. I mean, it impacts so many parts of our life. And what's happened is, we became, at one point in time, we were an exporter of oil. Now we're an importer of oil. Russia and Ukraine, that has impacted the oil supply in the world, not only the quantity of it, but the ability to get it. A lot of countries now are refusing to accept Russian oil. Some refineries are refusing to refine it because it's shipped as crude, not refined oil. Mm-hmm. We're getting close to the season where people will start driving more, so they're going to be using more gas. It has such an impact on our everyday life. We did see one day, the oil has just been moving up consistently, except one day, Thursday of this last week, where it actually was down for the day. What happened that day is that the United States, Russia, China, France, Britain, and Iran are meeting to kind of look at restructuring the 2015 deal that was made where we put sanctions on Iran. They're looking at reducing those sanctions and possibly having Iran increase their oil output. So that softened a little bit the impact to the oil industry. But anyways, that's one of the commodities. We can assume that because something happens, there's going to be an associated movement in the price of something. But oftentimes what happens is that we make that assumption and we make an investment based on that assumption, and the market does exactly the opposite thing. It's almost like there's somebody there pulling a lever, just watching you, waiting for you to make a decision, and then it does the opposite. So it's important not to rely on your opinion as the public, as an amateur. Why not follow people that are actually moving the price? Because It doesn't make any difference what's happening. The important thing, if you are an investor or trader, is what is going to make price go up, what's going to make it go down. And unless you can identify that with a high degree of accuracy, then you are gambling. And all you need to do is follow the people that are moving the price. It's too late. When you see an institution take a position in something and it's moved the price up, you can look at it and go, oh, hey, I just identified where an institution made a trade. It's too late. Mm-hmm. What you have to do is be positioned where their unfilled orders are and when they become filled orders. But you want to be positioned at that level, at that price, to make sure that you're in when the movement starts. That's where the highest quality trade takes place.
Yeah, and just to give an example of, we're talking about oil. That's actually the futures market. And I want you to kind of explain that a little bit in a second here. But just to give an example of the opportunities using leverage with the futures market. So, for example, and this is just an example, oil was at $106 for a low on that Thursday, and a high of $116, which is $10. One contract of opportunity there's $10,000 of opportunity with one contract in the oil market. That's what leverage gives investors the opportunity to utilize. Right. So go a little bit deeper into futures on how us as everyday people can get into the futures market.
Yeah, futures, the foreign exchange market called the Forex market, and options are assets that trade with leverage. And what Josh was talking about there is that the brokerage firms will allow you with the margin account to invest in something that is a multiple of what you have in your account. So with the futures market, that leverage can be anywhere from 20 to 1 to maybe 100 to 1 or more. Same thing with options. The foreign exchange market is typically 50 to 1. That's huge leverage. That's really maximizing the value of your money. That's what most of our students are doing. Most of our students come into our academies knowing about the stock market and mutual funds,
which is a good thing.
At least they're looking at something that's part of the market. They realize that there's a benefit there. What we're showing you is how to increase that benefit and invest in something maybe that you haven't heard about, you know nothing about. But it's just because no one's teaching you doesn't mean that they're out of range for you, that they're out of bounds for you. You can trade those things. You just have to have the right education to understand what they are. The futures market is basically it's what it says. You're looking at what the value of something will be in the future. It can be oil. It can be gold, silver, currencies. It can be the commodities like wheat, corn, Josh's favorite, lean hogs. Someday we'll do a show on why he likes lean hogs. But the commodities have been just on fire. The S&P, the Dow, and the NASDAQ have been down for the year. We've got oil is up, close to 30%. Natural gas 39%. Wheat 20%. Soybeans 23%. Those are things that you can trade in addition to maybe the individual equities, the companies that you might be more familiar with.
Yeah, and just to give an example, stocks are a great asset to trade and invest. Don't get us wrong there. But the great thing about that is the trading is basically still the same. Here's an example of a stock trader and a futures trader. Would be a farmer that maybe buys cattle and sells cattle, or maybe he sells or she sells sheep and buys sheep, or maybe he sells and buys horses, right? So it's just a different thing. It's the same concept. And that's the great thing about these markets is they're not new. They're just a little bit different. And understanding all these markets, I talked about the futures market with oil. The opportunities there with using less cash because the brokers require less. It's not, we don't do that. The broker requires less, so it gives you more capital efficiency. That allows pretty much any type of person get into the market. But you got to learn how to do it no matter what you're going to trade. Stocks, options, futures, Forex. Don't just get in the market and just put your hard-earned money in the market. Learn how to do it first. Right. Learn the skills and techniques. We have investing classes to get started with that. Callers 1 through 10, I want to give away 20 tickets. Call 888-682-6466. Locally here in Denver and Bloomington, 888-682-6466. Al, coming up next, I want to talk more about these commodities like gold, but also we got Snowflake coming up. We had some great, or actually rough earnings there. Big drop, I believe it was. in Snowflake. We'll talk about that coming up next.